Many new OTC traders enter the market, fall into a pump and dump trap, and lose money. Even the best traders can sometimes fail. However, if you understand these tips, the probability of losing decreases, and you'll end up earning a more substantial portfolio. In this guide, we'll provide you a list of the best tips for trading OTC stocks. 1. Diversify your portfolio. It's essential to diversify your portfolio. When you're trading and planning to go all in because you're 100% convinced that it could go up, remind yourself that greed is the enemy here. The same will apply to any kind of emotion. For instance, if you're trading with $1,000 and go all in, you will lose $500 if your stock goes down 50%. When you're down 50%, you'll need to gain 100% to break even. Many people don't understand this concept, which is why it's crucial. When you do your due diligence and diversify your $1,000 into 5 different stock symbols, you're much safer and will put your mind at ease. 2. Average down. Averaging down is essential for you to protect your portfolio, which means that you need to have extra funds to cover your investments if it ever goes down. If you put $200 into an OTC stock and it drops 25%, you can add more shares at the bottom to protect your portfolio from decreasing drastically. Before you average down, keep an eye out on level 2 market data to understand what's causing the drop. At times, averaging down will not help because there could be dilution in the market, which means that the symbol you're investing in could drop even further. 3. Accept your losses. When you're trading OTC stocks, you should know when to accept your losses. There are times when you should hold, but there are also times when you should accept the loss. Don't let any false confidence or emotions take over your mind. It often happens when investors get too attached to a stock, and it continues dropping. There are moments when investors become too attached to an OTC stock. Don't be that person. There are countless opportunities every day. If you lose that opportunity, then there is always another. 4. Take profits. The same pattern constantly repeats itself. As mentioned earlier, don't become too attached to an OTC stock. Remember to take profits. Whether your stock symbol increases 10% or 100%, the best strategy to protect your portfolio is to sell your initial investment and hold the rest. Investors can also do trailing stop loss to sell their investments at the highest as it slowly spikes. You will feel much better knowing you either broke even or profit instead of losing a portion of your portfolio. With these tips, it all comes down to controlling your emotions. Whether you lose or gain, the best strategy is to understand when to accept your loss and take profits whenever you can. Don't panic into an OTC stock because now, you're just trading based on your emotions. As always, we are not financial advisors and highly recommend you to do your research before making any financial decisions.